Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It's February 21st, the day after President's Day. We had some downside yesterday. What turned out to be a bear flag broke down, and we got bearish follow through today. What we're looking at here is the annual chart for the natural gas futures. We're going to also look at oil and UNG just to kind of get a sense of potential downside, although obviously they're making all-time lows. So every candle here is an entire year of price action. You can see there were some really big, like this was a monster of a year in 2000, green year. And then this was a monster rejection the following year, 2001. Made a lower low, but of course we actually got reversed. And then you can see since then, price has been more or less trading within the range of these two big candles from, again, 2000 and 2001. Obviously, there were points. I'm not drawing annotations on this for a reason. I just want to see a clean chart. You can see it visually. These, like, the range of this candle goes down to here, and for the most part, like, all of these candles don't, like, these candles start to make slight lower lows versus this. And of course, you have a big lower low in 2020 because of COVID, which gives you a little bit of a slingshot move. But what you see from this is that we have essentially been inside the range. You can almost draw a box like that. And what is the range on that candle from 2000? Right, there you go. The high is $10 and the low is $2.12. Does that sound familiar? We're here at 206. We're here at 2.067. Right. So to be clear, we are below the low from 2000. Wow, 23 years ago. That's important. You can imagine this. The low from 2001 is $1.88. We've been talking about on this channel how the $1.80 range is in play. What are the odds that we don't visit that level at this point? Now that we're actually finding ourselves below the low of 2000 again. That was a range that price has been trading in, and again, it poked down, and that could end up being what this is. And let's just add the annotations back. All right, just want to make sure everybody can see this. So I will get rid of that. But that's really important. This is like the big picture step back. What might the year 2020 hold? That's your low, and you can see again we went well below it in COVID. And right now we're just poking below it. We're like 6-7 cents below it. And you can see that level coming into play. Again, we managed to close well above that level when we poked below it in the past. But that doesn't mean there wasn't massive damage in real time in this year, right? It's entirely possible that this natural gas candle for this year, at this point, I think it's hard to imagine that this candle goes green for the year, so it opened at, well, actually, I guess that's not that crazy. It opened at $4. It opened at 4.393. So just to be clear, that would be getting back up to there. Oh wow, yeah, right. I mean, it'd be more than double, which wouldn't be crazy after this like bloodbath that we've had. That'd still be 60% below all-time highs, or not all-time highs, but this recent local high. And of course, to be clear, we did go off and make a new all-time high above that 2000, like these candles, to be clear. But what happened after that, right? What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, what, like 15 years of just downtrend until we got this swing low that ignited things back up after COVID, slingshot up. But what's happening right here, I've talked about this in previous videos, you're threatening to take out this whole move. That would mean potentially revisiting the COVID lows. I know that seems unthinkable for so many people, for so many things, but it's entirely possible. There's no reason that can't be the case. Look at the structure of this chart. If I didn't tell you this was a yearly chart and this was like a daily chart, there's no reason why you wouldn't think, oh, right, this big bearish daily candle is probably going to get followed through, or it's going to keep going. Like, you would expect that it's going to finish the job. Like, this is a pretty big move down, erased all of these gains, all of these gains, and a good portion of these. So it's like, well, it doesn't have too much left to go. The catch, of course, is we could see a crazy violent reversal as we approach those levels, like a slingshot back up. And, we close the year with massive wick. I mean, at this point, I think it's unlikely we don't close the year with massive wick on the lower wick, which means we're going to get a rally. It's just like, I don't see why we wouldn't have a rally at some point. And we talked about the seasonality. There's a strong seasonal patch for April, and then there's also one for August. But you could see a world where we close well above the lows. That doesn't mean it has to be necessarily bullish for this higher time frame, but at least potential upside. But this is the kind of time scale you want to kind of think about. Obviously, if you're taking individual trades, that's fine, but understand what you're stepping into. And so if we zoom in, we talked about this in the video yesterday, that 180 level is very apparent on the weekly chart. It is right around here. It's that big wick. This wick here has a low at 1.795. And you can see, if I zoom into that time period, it's a pretty clear, you had a big downdraft. Did we look at the percentage down? So that is a 34% move down. Now, mind you, we've dropped like 70%, I think, now. So this is nothing. So we dropped about 34% and then we rallied 90%. What is this crazy drop been? It's been a lot more than 34%, that's for sure. Oof, 79%, approaching 80%. That's big boy league. So again, price is sort of hurtling towards it. We're going to look at cold as well, since that is obviously moving up in the opposite direction. Definitely looks like an unsustainable rally. But look at this in real time now. Look at that little candle. Like that's a really important sort of thing to see and recognize. I mean, I say real time, it's relative. That obviously happened. That was, 2 weeks ago, more or less. But this is your little lower high, right? Like, it's important to recognize that. Price just kept collapsing like that. It needed a little bounce. We got our little bounce. Now we're getting a little lower low. Now that, of course, means even if price is going to go significantly lower, we're going to get another little bounce at some point. And then and then our lower low. Now, maybe that bounce isn't even another green candle. Maybe it's just a candle with an upper wick. So we start green, but then it collapses. This obviously was managed to close green. And there was a point where this candle was green as well. It gave it up, I think actually on a Friday. It just kind of gave it all up. If not, maybe a Thursday. But later in the week, essentially, it just kind of collapsed, if you will. And so again, it just seems to be hurtling towards that 180 area, if you ask me. We're obviously really close to $2, which is a sort of psychological round even number. We'll see if there's a little bit of a bounce there or any kind of reaction. But $1.80 does definitely seem like it is in the cards. And that would, let's just think about that for Boyle. If that is another, and that's nothing. That's another 13% down. So that gives you maybe another 26% down in Boyle. Yikes. And obviously we talked about, on the monthly chart, you can see that level pretty clear as day. I mean, wow, what a monthly candle this is with all that, right? Like it tried to go from red to green, didn't quite make it, but obviously it finished the job the following month. These are the levels that we're potentially going to revisit. Going to be pretty interesting. Now let's look at cold first. That's your inverse ETF. And this thing is on a tear. Let's look at the monthly chart. We haven't, let's just look at and that's what cycles really do. They help you understand rallies and declines. How long do they last? How strong are they, right? So you've got this rally that's call it 5 months or so. That's right when this thing started. And that was very healthy. From swing low to swing high, you get a 350% rally. Then you have this rally, which was choppy. There was big downside here, but that's 682%. Then you have this rally. We're just calling out the really big ones. That is 717%. And now you have from this Pico bottom, right? Remember, natural gas is down approaching 80%. And this thing is up 800%. Wow. Interesting. That's an interesting return. Now, you'd have to hold through a lot of I mean, this was a massive, just moving this out of the way, this was a massive reversal that looked certainly like it was going to make a lower low in real time. So you definitely have to be aware of that, or you'd have to have sat through that, which is tough. But of course, you could have re-entered once we made a higher high above here. So that's, what is that? That's at $22 more or less. Now, of course, this thing has, since really from here, I mean, this is a massive double top. This is a pretty big down move. So you're down. I mean, this thing is an all-time high at 1745, right? And we're down here at 80, right? So that gives you some context. It has to do a sort of 20x to get back to all-time highs. And keep in mind, look at this. You can see it with your own eyeballs. This is the strongest rally we've had from any bottom. And you also had this rally, which is kind of easy to overlook a little bit because it doesn't seem as vertical, and it's not, because it lasts for many months, but it doesn't go that far. It's 145%. That's obviously all relative here, again, because you're talking about this rally that happened in the space of 6 months. Again, 2 of those months were red and just, big sell signal, but even if you were counting it, let's say from here, you're still talking about a massive 585% rally. So you can kind of quibble either way. We've gone a pretty long way. Now, I wouldn't be shocked if we got back up to like there. That wouldn't be crazy. I'd say we'd probably miss it by a little bit. So from Pico bottom, wow, that would be 1,700%. That would be quite the move. But structurally, you could see a reverse symmetry move. The reason I say that is because you can see this is your lower high. So or you see boom, 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 boom. So wouldn't be crazy to do something like that before. Now, I'd say approach that level before, because this thing is in a long-term downtrend eventually. But certainly you would expect this thing to get past 100. For sure. I mean, the tempting thing is to test this pivot here. That becomes kind of your North Star. But more likely, you probably end up at like this area right here, where you can see price kind of aggregated, made a low here. Also, this was where it found the bottom as well. It actually closed around here. So wouldn't be surprising. That's around 107. So we're here at 81. That's a nice little upside. It's about $27 on $81. Of course, looking at this daily chart, I mean, the gaps on this thing are crazy. You can see this is just a crazy bull flag, and then boop. And of course, it's a bull flag in hindsight because it's broken out. Now it's like, oh, well, this was clearly a bull flag, not something that was going to droop lower. In the same way that the natural gas structure, if you will, it was a consolidation, as we talked about. That's what it was. And the question is, what side was it going to break? And it obviously broke to the downside, just as this broke to the upside. You would imagine these gaps eventually do get filled, though. So do have to be sort of aware of that. But that's the thing. The money is made overnight in these things, and it's also lost overnight to these kind of huge gaps. So that's cold. And of course, Boyle and UNG, we'll just take a quick look. If you kind of think about, I mean, we're just at this point just making, wow, what a chart, man. Like if you think about, I almost think about it in terms of like a sort of counter trend rally. Just keep in mind, we could get a move back to like even $8 and it would still be incredibly bearish. That's almost 100% move from here. So this is in very interesting territory. What you do need to be aware of is that this thing is going to reverse split likely, right? Which means they will shrink the float to prop up the price. Notice the all-time high for this thing is $39,759. How do you think that happens? It's because there have been 4 reverse splits. Some of them were 4-to-1, some were 5-to-1. So if they did a 5-to-1 split right now off this 440 level, each share would be worth about 25. What is that? 40. If they did like a 5-to-1 split, each share would be worth like $22. So it's a way of keeping the price from actually getting to zero. The lower and lower it gets, you do a reverse split, gets the price back up, and allows the thing to trade. They claim sort of more efficiently. And this is not something that they hide. It happens. You can read it on their website. And you can see just the total performance for something like Boyle. I mean, yeesh. What I will say though is just in general, the broader market, the S&P 500, is in daily cycle decline, possibly weekly cycle decline. So it's not surprising that natural gas is going to get taken out to the woodshed as well. I think someone had mentioned in the comments, people might buy natural gas as like a value play. I never really bought that. It doesn't really make sense. It's generally, so that's, yeah, top on day 27, and it's currently day 39. So certainly getting in the timing band where we would expect at least a short-term low. But the real question is, are we descending into a weekly cycle low? Because we do have a swing high on the board now on the weekly chart. So that's important to know about because, of course, this is going to determine the trend for most stocks just in general when the broader market isn't doing well. Now, and what this is suggesting is a false breakout above this high from that COVID meltdown. That is very interesting. This was a bear market rally crowd is obviously very loud right now. We're going to have to see how far this goes. But right now, we are potentially starting a downtrend on the weekly chart. That's the important piece. And the monthly looks, horrendous. This is like not what you want to see because the bear case is it's actually very simple. I think we might have even talked about, look at that like wick. That's the bear case. Something like that. And of course, the February candle is closing very soon. So in the next few days, right? Well, right. It's going to be closed. I mean, we probably have like 5 or 6 trading days left. And so that said, could give us enough time to get a daily cycle low in. But if the candle remains something like this, you could see a world where September opens something like that, right? Just right to the downside, makes a swing high. That would be your ultimate bear case, what you want to watch out for. So we'll leave it at that. Broader market is under pressure, and that will do the same. That will put natural gas under pressure as well, obviously. Thanks for watching.